Hello and welcome. This is Hot Money on Bloomberg Quint. Today we are going to talk about a whole host of stocks, and of course among many others we're also addressing Reliance Industries, we're talking about the pharmaceutical sector, we're also talking about insurance and many other areas that we intend to talk about, of course the earnings surprise as well. But on that note, let me get in our experts for today. We have Dharmesh Kant and IndiaNivesh who's joining us in the show right now. Thank you both for joining us and taking us through all the counters that we're going to address today. And I'm going to start off by talking about Reliance Industries. Let's take a look at what it's done, and we have a decline of around 1% currently, but on the whole it has gained, and the real question is at a 10 lakh crore market cap, what can it do? Where do we go from here? And what is the essential prognosis on this one? So I'll open this one up for our experts. Avinash, I'll start with you. Where do we go when it comes to Reliance Industries? How are you rating this one, and what's your preference here?
I think, Agam, we continue to be positive on Reliance. Our thesis on Reliance is that the Q2 results which recently came out clearly pointed out that the Jio and the retail business did pretty well. Of course, the oil and gas business did moderately well, but obviously GRMs were not absolutely up to the mark. Our sense is that in the coming 1 or 2 quarters, what could happen is that you could definitely see GRMs improving, and hopefully with crude prices bottoming out and throughput increasing, we could see some amount of earnings surprise coming on the oil and gas business. But I think the key trigger for Reliance would be the retail and the Jio business. In fact, as far as Jio is concerned, I think a good news flow has been for the telecom sector which has come in, is that spectrum charges have now been apportioned. I think there has been a good timeline given for all the players. Plus, considering the fact that all the 3 players are planning to actually hike, tariffs now from the first week of December. So I think this is definitely good news even for Reliance. Overall, I would believe that despite the fact the stock has outperformed, I would not be surprised at looking at the third and the fourth quarter numbers, and hopefully FY21 numbers, which we believe could be even stronger for Jio. Overall, I think it's definitely a stock which could be accumulated, but on declines. Stock has seen a little bit of momentum, but I think this is partly because markets are factoring in the fact that after the Aramco deal, possibly the news flow on the debt reduction and the stake increase in Reliance oil and gas business could possibly come out, and that could be the new trigger for Reliance going forward.
Right. Okay, there you have it. But again, Dharmesh, a lot of factors playing out. We have Aramco, you have, of course, Reliance Jio, and you also have Reliance Retail. Where do we stand on the company, consolidated level?
See, my own sense is that Reliance is a clear, accumulation kind of a stock for your portfolio, and every declines. See, the refining business is already settled, Petchem is also settled. Sure. What they were trying to establish is the retail business and the Jio thing. So first let's come to the Jio part. With tariff hike going up, and the other 2 players are already financially burdened. So it may be delayed for a timing, but that burden has not been waived off. And even the October numbers showed that subscribers have been moving from both Vodafone Idea and Bharti to Jio.
Correct.
So that base is getting increased. At the same time, now you have a chance to play at a higher ARPUs, higher tariffs. So that will again add on to the overall numbers. So the entire thought process of Reliance that 50% should come from retail and Jio will materialize in FY21 to 22.
Right.
So given that fact, I see EPS of around 115, 120 for Reliance by FY22.
Okay.
So discounting that, a company which is growing at 20% kind of a CAGR for next couple of years, with lot of value unlocking of businesses yet to happen.
Yes.
So 20 valuation multiple is very likely. So 22, 2400 can be the likely target price. It's at 1550 right now.
Right.
So 100 rupees, if you get a chance correction in Reliance because of the market, succumbing to some pressures, it's the right time to accumulate. So it's a clear buy. It will continue to outperform for at least next couple of years.
Okay. Well, both our experts are quite positive on Reliance Industries in the long run, mind you, with targets of a possibility of as much as 2,000, 2,500 also on the annual by at least one of our experts who's suggesting that. That said, we're going to have to wait for a few more developments over the next handful of quarters, and perhaps that could give us a better idea about where things stand and how things are moving forward for Reliance Industries. Let's not forget the possibility of unlocking our businesses, unlocking the value of the many businesses that hold in through Reliance, through its company's various businesses that it holds through the consolidated venture. But moving on, let's talk about the earnings, and the earnings are over. We've seen earnings come through, well, some good, some not that great. Let's talk about that and where we've seen a big surprise coming in through. So Dharmesh, I come back to you. What stands out for you in this earnings season?
See, I was pretty surprised when Bajaj Finance announced the numbers.
Yeah.
It was on expectation was there, but having heard the management before, so they cited that there was a clear slowdown in TV sales and all, in spite of World Cup and everything happening.
Yeah.
So I was expecting them to report a tad better, tad lower numbers on the earnings front.
Okay.
But if you look at the top line growth, be it operating profit and bottom line, all expanded in a very surprising way. 50% plus kind of a PAT growth was a big surprise to me. So, and same was with Avenue Supermarts.
Right.
If you look at those numbers, that was also a big surprise. So the takeaway for me was that it's now gain of market share from others. Market may not be expanding the way it has. It was expanding, but it's
Right.
now the players who are better equipped, who are moving ahead of times, who are taking advantage of technology and analytics. So Bajaj Finance has, as far as analytics is concerned, they are far ahead from other players. The type of analytics they use, and that was shown in the numbers. So they are moving ahead of time. So that was a big surprise, and I think this trend will continue for next couple of quarters. So the expensive may still be expensive and get more expensive,
Right.
because others are losing their market share in favor of them.
Right.
And in automobile, if you see, case in point can be a Scots. So tractor sales as a market is not expanding,
Sure.
but they are garnering the share from the M&M and the others.
Okay.
So these are the players which, it's a new indication for the market for next couple of quarters, where one should be focusing on companies which have been doing well in this difficult market and taking
right.
market share from others.
Absolutely. Well, point taken, and a very valid one too coming in. But Avinash, where do you stand here? Of course, one large cap and one mid cap that Dharmesh has spoken about. What do you like in this earnings season?
I think one number which actually surprised the street, and in fact even our sense, was Tata Motors numbers. In fact, the market was expecting a very huge kind of negative loss in the second quarter, but looking at the kind of operational improvement, Agam, I think second quarter has definitely stood out for Tata Motors. And I think despite the fact that the company is not completely out of woods, what stands out is now the management clearly is looking at a lot of cost cutting strategies, working capital improvements. I think in terms of the capex requirement also, it's going to be a very thoughtful kind of capital allocation kind of program. So our sense is that despite the fact that the second half of FY20 would be a little challenging, JLR numbers should do better. In fact, the margins from JLR were pretty high. Our sense is that hopefully if JLR is able to maintain these margins, the market should obviously be quite positive. And on the domestic side, the key trigger for the company now would be whether the government announces the scrappage policy at the earliest. Our sense is that the discussions and new reports suggest that possibly in a few weeks the commercial vehicle policy, the scrappage policy, would be announced, and that I think would be a key trigger for the domestic part of the business, which actually has not done well for Tata Motors. So I would suggest that somebody who's got a long-term view could definitely look at the stock from a say 18 to 24 month view. I would believe that some part of the negativity has started bottoming out, and possibly if one has a long-term view, one could definitely make a decent risk reward. So this was one stock where possibly we were assuming that the company would not recover, but I think the recovery in JLR was quite astounding, and I would believe that this is going to be possibly a stock to watch.
Okay, fair enough, and well, point taken. Of course, and the most important point I guess Avinash in this case is making is that you probably have not much to lose, and the risk reward is certainly favorable considering what the management has come up with, and of course the various factors that were elaborated by Dharmesh on specifically Bajaj Finance. So these two large caps standing out, both of them nifty companies. But moving on, let's talk about the insurance space, specifically the life insurers. Pardon me, private insurers, maybe life or for that matter general insurance in this case. Of course, so we do have the likes of HDFC Life, SBI Life, ICICI Prudential, and in general insurance as well, a whole host of companies like ICICI Lombard, or for that matter, something like a Max, which is also into insurance. Where do we stand? How do we choose? How do we go about this entire sector? Avinash, the private sector space specifically, not necessarily something like an SBI Life, but what do you like in this and why?
See, I think we have been very positive on this space, and despite the fact that these stocks have run up quite significantly, our view is that investors should take a long-term view, at least next 2 to 3 years. And I think private sector players like ICICI Pru, or even for that reason SBI Life, I think these are stocks which cannot be looked upon from a quarter-to-quarter kind of view. Obviously, from a 2 to 3 year horizon, our preferred choice is SBI Life. We still continue to believe that despite the Carley deal which happened, and post that the stock corrected, the new premium growth as well as the kind of balance sheet, and as far as the parent strength goes, they have a huge distribution network which is going to be extremely useful for penetrating the market further. And I think as far as financial inclusion is concerned, these are products which are slowly going to get more and more polarized and used by the masses. So I think it's going to be a long-term call, but we have been recommending to buy and accumulate SBI Life on every decline. And again, ICICI Pru is also another stock which we would be recommending to our clients.
Well, it's always interesting because when you actually put SBI Life against something like an ICICI Prudential and HDFC Limited, it's essentially the valuations that sort of trumps and works out in favor of SBI Life. Well, that said, Dharmesh, what about you? Where do you stand in this picture?
See, the entire space is very attractive. We should not look at the run-up which they had because of the type of market which we were into for last 1.5 years. So here you had growth. At the same time, it's more of a utility product.
Sure.
So both, combined propelled the stock prices far ahead of its fundamentals as of now. But again, coming back to the original point that still the market is lot to be penetrated, and some tweaking by this life insurance company which suits the Indian sentiment of products. So some equity built up into this entire scheme can work wonders for them.
Right.
So where the return is also a bit better than what you get from. I mean, it's lower than FD returns if you compound it over a period of time.
Right.
So if something innovation can be done there, then sky's the limit for all these companies. Coming back to these companies, I think SBI Life and HDFC Life stands out. Because if you look at ICICI Pru in last 6 years, the PAT growth has not been there. It has actually come down on a CAGR basis. At the same time, balance sheet has only grown by 2.5 times. Whereas HDFC Life and SBI Life has compounded over 3 times on the balance sheet growth, and PAT CAGR has been 19 to 20%. So HDFC Life they have grown their balance sheet well. At the same time, the PAT growth is also there. So they command a better premium than SBI Life. So in pecking order, I would go by HDFC Life and SBI Life. These stocks may go for time correction because of the recent run-up which they had. But if you have 3 to 5 year kind of a horizon, they all are multi-baggers.
All right. And so for now, you're not so bothered about the valuations, not just in the insurance space, but even if you consider and compare it to some other mid-cap companies in general, you think that you don't mind paying that premium for the valuation?
Yes.
Okay. All right. So there you have it, guys. Well, we have a preference, a clear preference in life insurance companies, one, and well, the tilt is certainly towards 2 big companies here. In this case, SBI Life and HDFC Life. And as we all know, they have seen their bout of outperformance in comparison to the rest of the markets. Thereon, let's talk about a bunch of other companies, and of course we have to talk about the pharma companies which stand out. In this case, what we have seen of late is that gains in pharma stocks. And one might argue that a lot of these pharmaceutical companies have gained on their own accord. There are reasons where it's not necessarily to do with the sector, but perhaps more to do with the way they operate. And of course, we all know the kind of exposure it has to, the US FDA and the norms therein. That said, we are seeing some amount of resurgence in some of these companies of late. And as you can see on your screen there, we have Sun Pharma, Cipla and Dr. Reddy's advancing to a certain extent, in the last couple of weeks or two. But these are just the large caps. In the entire sector, where is the preference lie? What do our experts like and why? So Avinash, I come back to you on this one. What is your view here?
No, I think, Agam, we have seen a very dramatic shift on the pharma side. In fact, the flavor for the market has again got caught on the large pharmaceutical companies. And within this pack, I think, we have been recommending our clients to look at Sun Pharma. Our sense is that Q2 was definitely in line with expectations. And now the key trigger for the company has been the specialty portfolio. I would believe that over the next 1 or 2 quarters, the markets could be keenly looking at the fact that this specialty portfolio would obviously be enhancing and boosting the EBITDA margins. In fact, EBITDA margins which came in Q2 were more or less in line at around 21-22%. Most importantly, looking at the kind of capex program and the kind of positioning the company has got on the US market side, plus the kind of hopeful product releases from the Halol facility, I would not be surprised that possibly the third and the fourth quarter for Sun Pharma could be significantly better, and possibly FY20 could be a consolidation year, and FY21 could be a year where possibly we could finally see better growth after a very long time. So I think at these levels we have been telling our clients to slowly accumulate the stock. Most of the negatives have got built into the price, and I think going forward, looking at the earnings recovery and the improvement on the US product portfolio, one could definitely look at it as a long-term pick.
Avinash, since you're talking about Sun Pharma, there's a possibility of Sun Pharma being availed 1,000 crores, which is lying with Taro. Should the plans with Taro come through in the fact that it can have majority ownership in Taro? Of course, it already has majority ownership, but that's well over 90% ownership in Taro. What do you think those 1,000 crores would mean for Sun Pharma? Where do you think it would go ahead and spend?
I think my guess is, I think this is a possibility, but I think since it yet has to happen, I would believe that I think this would definitely be used for more on product development, especially on the specialty product portfolio. That is something which the management has pointed out, that there is definitely a scope to enhance capex there and possibly look at more product launches on the US market. So I think clearly this cash would obviously come handy to Sun Pharma, and I think this is definitely a possibility, but unless it happens, I don't think one is going to factor in that variable in the rating multiple as of now.
Okay, fair enough. Dharmesh, I know that you have been hesitant to talk about the sector in general overall, but where do you stand, and there is a possibility of some opportunity here?
See, if you go by the thesis of pharma, so the bull run which happened a couple of years back, it was primarily on the basis of many of the US products coming off patent, and we are primarily a generic product maker in the pharma space. So they were applying for ANDAs, and approvals were also coming from US FDA for all the ANDAs being applied for. As of now, new product filing is not there. And whatever is pending, the approvals aren't coming easier way, and the competition has been heating up in the US market. So US market, which was once upon a time the biggest growth area for pharma sector, is being a laggard now. So they have been focusing on the Indian market space. But India again, as time rolls by, government is bringing down the pricing less. So again, there is a pricing cap on the Indian products which they are offering to the market, with the vision that it will come further down. So operating margins will get squeezed going forward. So as a visibility for next 1.5 years, we don't see. So that whatever they are earning, if they are able to maintain that, will be good enough for the present pharma players. In which some trading blips can happen. So that was the reason why we are particularly staying away from pharma space. In the basket, I would agree with Avinash that Sun Pharma does look a bit attractive, but nothing very exciting about the space as of now.
All right, fair enough. So, well, that's the overall view on the sector, and perhaps the preference, if at all, lies clearly with Sun Pharma, and something that our experts agree with. Well, we have reached the end of the show, so on that note, I'm going to take a moment to thank both our experts, Avinash and Dharmesh, for joining us and taking us through their views on the whole host of stocks and sectors that we've spoken about. And with that, it's a wrap on today's edition of Hot Money. Ask BQ is up next.